Welcome back. I'm Pratap here. Today is the 13th February 2025. In this video, I'm going to evaluate the performance of high liquidity zones identified in the previous report. We got a very good number of trades today. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. Some of you might be knowing the cost of the training is over 8,000 US dollars. But we are providing complete free training and all the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you click on the tab posts. Some of you might be seeing a community tab. Click on the tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course YouTube playlist. I kept all the training lessons in this playlist. You need to start your training from lesson 1.1. That lesson is available at the bottom of the page. Scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons I placed in an order. So please go through all these lessons according to the training instructions I mentioned at our Telegram group. I provided the link to the Telegram channel in this video description. So go to the Telegram channel. At the top of the window you can find the pinned messages. Click on the pinned messages. There you can find the training instructions. So learn the course according to the training instruction. Definitely, you will become a very good independent trader in next 3 months time period. Please make use of this opportunity and strengthen your skills. Okay, now I am evaluating the performance of our high liquidity zones identified in the previous report. Let us check their performance in today's session. Please remember, whatever the trades I am specifying here or mentioning here, they are not my trades. This is my self-declaration. These are the opportunities given by the software. This is only the performance of our software I am evaluating. That is what everybody should understand. Many of you might be knowing this, but some of the new members, they might be thinking they are all my trades. No, they are not my trades. They are the opportunities given by software. I am not discussing my trades anywhere. I never discuss also my trades. Here my focus is about this software, how our software is working. What is the performance, what kind of opportunities it is giving. That is only I am evaluating. That is the main goal, because here I am promoting my software. That's why I want to check how exactly the software generated zones, how it is performing, especially the strategy we discussed in lesson 21.3. HLQ zone strategy. Okay, the first one is Crompton. Crompton is a 75 minutes high liquidity zone. Previously, once we discussed Crompton, because at the time we have drawn this LTF zone and it gave a trade also previously. So this is a drop, 4 base candles and a rally candle. Here we have a 5 minutes LTF zone. And previously we got a trade in the LTF zone. Prices came here, moved up, and again next time also came very close. At the time slightly we missed the trade. And while prices are moving up, when it happened on 12th February, when prices are moving up, they created again a new zone here, a fine-tuned 15-minute zone. Now let's get into the fine-tuned 15-minute zone created recently. See, here we have a leg-in candle, and we have 1, 2, 3, 4 base candles and then a rally candle. Rally base rally, the 15-minute zone. And this 15-minute zone again we fine-tuned with 5 minutes time frame. But here you have a very important learning. Actually this learning already you had earlier, because we had a separate HLQ zone analysis video on that. I kept it in important strategies and analysis playlist. That you will understand once we get into 5 minutes time frame. Same concept we applied. See here the 5 minutes zone, we have a drop, we have a base, we have a rally candle. But are you really happy with this rally candle? Because this is only the best zone available here. But do you really feel happy about this rally candle? Not really convincing. Maybe this is a little bigger than this medium size candle. Maybe this is the smallest leg out candle, or maybe this is the largest medium size candle. That possibility is also there. So that way we are getting ambiguity whether to consider this zone or not. For that, what is the solution I told you? You know the solution. At least your mind should flash with this solution. So we discussed about 3 minutes zone is a supplement to the 5 minute zone. We can supplement 5 minutes zone, 3 minute zones with the 5 minute zone. It's not the replacement, but alternatively we can use when 5 minute zones clarity is missing. Go to the 3 minutes. Perfect zone you will see here. See here. You have a drop candle, you have a rally candle, you have a base, you have a drop, base and rally candle. A perfect zone. That is what I have drawn. Drop, base, rally. See what happened today. And moreover, you see here the prices, they almost came near to that here. Especially the reason why I am very much confident about this zone is the price action after that. Prices came close to this zone, but they didn't reach into this zone. That means the order flow in this area is very strong. Here also they came, not very close, okay. So definitely this is the area we should not miss. See what happened today? Prices entered into the zone. When it entered at morning 9 o'clock 27 5 minutes candle and failed to reach this target zone. Failed to reach this target zone. Then where we need to exit? This is the, see I have drawn a blue color line. That is the area most of the time their prices were staying here. If you would have exited here, you would have got the best profit. Some decision making you have to take. See here only it is just, first of all, at what time it came first time? 10 o'clock 9 minutes. Generally, you know what happened before reaching the target, prices won't go like this. See, prices will go up, go down, go up, go down, go up, go down, go up. It should go. But here they are just holding. So we have to take a decision. See, morning 10 o'clock 6 minutes and the last opportunity you got 11 o'clock 54. So nearly 1 hour 50 minutes prices were here only. This is the area holding each time. So that's why this is the area you need to exit. See, there is a concept called support line and resistance. I don't know. Conventional technical analysis people, you are aware of this concept. The olden concepts. Support line and resistance lines. That is the area prices. Definitely you might be having some lower time frame. I saw even 1 minute zone also not clear. Maybe tick wise data, if you looking, but we don't have access. But if anybody is having access to tick wise data, you will see somewhere here a strong order flows might be here. So that is the reason why it is holding. That is that based on that only they developed a concept, support line and resistance line. So this is blue color line is a resistance line. It is not letting the prices go up. Of course, the support and the resistance lines will be slightly pierced. Prices will be moving a little up and again come down, moving a little up. So that means around that area prices will be moving up and down. So due to that reason, those areas, breaking those areas are not easy. So sometimes prices are holding on these areas, draw a support line or draw a resistance line. Fix that as a target. Earlier people were taking trades based on support and resistance lines, but I don't encourage that. Always you have to take a trade in the zone only. But target points of view, you can use support lines and resistance lines. Previously also once I explained the same concept, support and resistance, maybe in last two months or 3 months time period, not more than that. So remember this. I think yesterday also we exited a trade based on this concept only. But this one, how much profit it has given? Crompton has given 19,710 rupees, which is 16.2% ROI as per one futures margin cost till this area. Or maybe after this, maybe if anybody used, instead of going, if any of you used trailing stop, maybe one of the maybe a 5-minute zone or 1-minute zone, whichever you are using, probably after, see this is the one broken here. Somewhere here you might have exited. If anybody is using trailing stop, this rally to base candles rally, after this is exited, maybe you might have exited here. That is also an approach. Trailing stop most frequently we use. And those who exit based on this resistance lines, they would have got the best profit. See, these are the exit strategies when prices are not reaching to your target zone. So this is one point you have to remember. So this is a perfect trade, Crompton. And next we will discuss about PI Industries. This is a LTF lower time frame horizon. First of all, this is a 75 minutes zone. How this zone is created? We have a rally, failed ERC as a rally. Actually, it's not failed ERC. Maybe failed because so much big wick is there compared to this large body. Still, okay. This is a drop. You have 1, 2, 3, 4 base candles and a rally candle. I think this is a drop only. Our software has considered this as a drop. So that's why till the lower wick I have drawn. Software considered this as a failed ERC candle. Because it exactly do the calculation spot. So we have to 100% trust the software. So this is a drop candle. Dynamic view point of view, it is a drop. Not only dynamic view, even the larger wick compared to that smaller body. Okay, anyway, this is a drop base rally. It looks like rally base rally, but actually because of the large wick, it is a failed ERC. That way it is a drop, dynamic view point of view, it is a drop base rally. And this is the one we fine tuned with 75 minutes time frame. 15 minutes time frame. Here we have a drop candle, 1, 2, 3, 4 base candles, and with this is a rally candle at the hidden body. You have hidden body, right? Then this is a rally candle. Large candle you will get. Okay. Up. This is the 75 minute zone. And also at the distal line, have you noticed? At the distal line, again a drop base rally is there. This is the 15 minute zone horizon to this entire 75 minute zone. I repeat, this is the 15 minutes horizon to the 75 minute zone. This horizon is also having fine-tuned 5-minute zone. That is the area we got the trade. But what about this 75-minute zone? This 75-minute zone, there is no proper fine-tuned 5-minute zone. Let me show you. So let's go to the 5 minutes time frame. It's almost 1 year back old. See, data is over here. Luckily, we got 1 year data and we are able to identify fine-tuned 5-minute zone. Look into this zone. The zones are not very clear here. Here we can draw a zone, but this is pierced in this candle. You can draw actually rally, two base candles and a rally with hidden body. And this zone is pierced. That's why I didn't draw. Let me show you. See here, the zone is pierced. Otherwise, we would have kept this zone. Other than that, we didn't have any proper 5-minute zones, fine-tuned 5-minute zones are. This is a drop candle, but you can't draw a zone because there are no proper legouts here. Here also you see, this is a failed ERC candle, drop candle. So we don't have any base candles here. So that's why we know this zone will be violated easily. After that, prices moved outside the zone. Because we have to draw inside this zone. But here you have again, you see, you have a drop candle, two base candles and a rally candle. This is the fine-tuned 5-minute zone. So this fine-tuned 5-minute zone is the origin for this entire 75 minutes high liquidity zone. And today we got the trade in this origin. See, prices reached here. When prices reached at 11:35. And here you have a 15 minutes target. In the 15 minutes target. I consider this is a leg-in, not really convincing leg-in, but okay. This is anyway target point of view, right? So we have a base and a drop follow-through candles. See, because of this big candle, this candle is looking like medium, both these candles. That's why just hide them. You really understand the structure. So drop follow-through candle. So that way this is our 15 minutes target. But from our entry point of view till this area, we should have minimum 1:3 RR. Actually little short of 1:3 RR. Till this 15-minute zone, the shortage is little. That's why I adjusted the entry a little inside, a very little inside the zone. From this proximal line, just went a little inside. And here we got the entry. See, if you take more deep, many times what happens, that we will be missing the trades. Because yesterday also I have seen in the comment section, some of you kept the comment. You didn't add entry buffer, they missed the trade. And someone is fine-tuned the zone too much, up to 0.4% risk. But he missed the trade. That is what you mentioned in the comment section, I am telling. See, when you minimize your risk too much, you will be missing good trades. And you only said in the comment section, you got 1:, how much? Some 8.5 or 9.5 RR, you missed it. Such a great trades we got yesterday. Because the too much fine tuning, always a problem. Make sure your risk will be somewhere around 1%, somewhere 1.2% to 0.8%, in between. Make sure. At least you should accept. See, if you want to get profits, sometimes at least a minimum risk you have to bear. You should not think your risk should be less than 0.5%. If you plan like that, I agree that is the safest. But many times you will miss the trades. Many times your trades also will be stopped out also, your zones also. That possibility is also there. When you fine tune that much low level, if prices reaching to that level, there, see, remaining 4% as a 0.4%, if it goes down, easily your trades will be stopped out. So that's why don't take a proper, see, slowly you will understand. See, initially, we are very stringy when we are planning our trades. Why we are stringy? We don't want any huge losses. We want losses should be very, very small. That way we feel. But we want a very big profits. That way we will be very greedy. See, we act like we are very stringy and also we are very greedy. Initially, our behavior of the trader. Slowly you will come out of those problems. It happens. This is the cycle. In this cycle, everybody should undergo this kind of this is a kind of a psychological adjustments we have to make. Slowly you will overcome all these things. When you will overcome, when you understand the reality. Once you understand the reality, you don't feel bad even if you lose 1.5% money also. If you lose, you don't feel bad at all, because in the next trade probably you will get 3 or 4 times more profit you will get. When you compare your losses and profits, automatically your mind will be started accepting what? Accepting taking higher risk. So that's why while fine tuning, very carefully I do the adjustment, fine tuning the entry. I'm talking about fine tuning the entry. I don't go too much inside. When we miss, see, narrowly, I just ensured 1:3 RR. Okay, I'm happy with that level. But actually, by looking into the price, you may feel if I would have I would have fine tuned even more inside also, I would have got a trade. I would have got even more profit. That is how we feel. Okay, today it happened like that, but many times if you fine tune too much, you will be missing the trades. Reducing the profit, not a problem at all for us. Missing the trade is a problem. Missing a profitable trade is a problem. That is how you should understand. Just because we compromise for reducing some more small risk, we will be missing good trades many times. Missing trade means missing getting the profits. So this is one thing everybody should adjust. Okay, but what happened now? Prices went more deep, almost close to the digital line prices reached. But they didn't touch the digital line, but came very close. And then prices started moving up, and finally reached this 15 minutes target. That is the way PI Industries has given 3,750 rupees profit, which is 5.1% ROI. See, small profit, big ROI we got. How it is possible? Because the margin cost is less than 1 lakh. That's why you got good ROI even though profit is only 3,750. Maybe around 76,000 or 78,000 the margin cost. Okay, anyway, this is a successful. Next time the zone is violated. Next time generally we plan trades, but why we didn't plan? Because earlier price came almost close to the digital line. Taking second trade might be little risky. Maybe if anybody can take, I should not say you cannot take a trade. Sometimes what happens? First time price may reach near the digital line. Second time from the proximal line itself it will touch and again it will move up. It will give another successful trade. So that is the reason why strongly I am not objecting. You should not take second trade. But there is a reason to say in case why we would not take a trade. There is a reason here. Prices came more deep. It doesn't mean every time they will be violated. But if anybody would have taken a second trade, maybe your trade would have been stopped out. But you would have got a very minimal loss. So that is okay. But the reason for not taking second trade is earlier prices came very deep. There are higher chances. I'm not saying 100% chances. There are higher chances that zone can be violated. Can be. That is what happened. Zone is violated. Okay, this is about PI Industries. And we got two more LTF zone trades we got. And one more trade is, we got two trades I think. What is that? UPL. Yeah. UPL gave two trades. Where is UPL? UPL is a daily high liquidity supply zone. This is also a lower time frame origin, 5-minute origin to the 15-minute, the fine-tuned 75-minute zone. So this is a daily zone. How our software identified this zone? as a rally 1, 2, 3, 4, 5 base candles and then a drop candle. Is that way? I don't think that way. I think software identified as a, might have considered this as a rally, 3 base candles and drop. Is that way it identified? Just check. Anyway, it doesn't make a difference. I'm thinking rally, 3 base candles and drop. Software might have identified this as a rally, 3 base candles and drop. Okay. This daily zone is fine tuned with 75 minutes time frame. We have two 75 minute zones here. One is the drop, 1, 2, 3, 4 base candles and a drop candle. This is the way we have drawn the 75 minute zone. See, the drop, 1, 2, 3, 4 base candles and a drop. And again one more 75 minute zone, we have a rally, 1, 2, 3, 4 base candles and a drop candle with hidden body. At the hidden body, this will be a drop candle and remaining will be a big wick. The hidden zone, this is the one. And look into the 15 minutes time frame. In the 15 minutes time frame, see here, you have a rally candle, 1, 2, 3, 4, 5 base candles and then a drop candle. Rally, base, drop. And also have you noticed one more drop, base, drop? LOTL zone. We have a rally, base, drop. This is a drop, base, drop. This is a high exposure. See, because of this high exposure big candle, all the candles will turn into small, small candles. Let me hide. Now you see this is a big candle, very big candle. This is the biggest problem with this is the problem with scale adjustment. The moment scales are adjusted, the visual representation will change. This is the biggest problem with scales in the software developments. Okay, anyway, that's why I hide this candle. Then initially I also thought this is a small candle. The moment I hide this, then this become a big candle, good enough to consider a leg out candle. And this zone is having LOTL zone. This is the one, drop, base, drop. Why I didn't draw? Because sometimes in this zone we may find a 5 minutes order flow, right? Actually I have drawn and I deleted. The reason is it doesn't have any fine-tuned 5 minute zone. Then waste of time, because this is the main horizon we have. Anyway, I will show you why there is no proper. First let me draw and show you for learning point of view. Let me draw. So this is the 15 minute zone. This 15 minute zone is an invalid zone. Why? Because in the 5 minutes the structure is very bad. We know such kind of zones will be violated easily. Okay, here, but why this is having importance? This is having importance because this zone is acting as an horizon. Rally, base, drop, horizon to this 75 minute zone. Okay, what about here? Here we have a rally, base, drop, 15 minute zone. But is it having a fine-tuned zone? No. Why there is no fine-tuned zone here? That we will discuss. Inside this 75, rally, base, drop. Let's go to the 5 minutes time frame. First let us look into the top one. What is this candle? Failed ERC candle, or maybe more than 40% body is there. Maybe it is a rally candle, big candle. And this is the drop candle. In between, any base candles are there? No base candles. So that is the reason why there are higher chances such kind of zones will be violated. Okay. If at all you can draw a zone here, rally 1, 2, 3, 4, 5 base candles. You can draw a zone like this, 5 minute zone. Risk is very, very high. and moreover it is already tested. So because of these reasons I didn't concentrate on this. Okay, and what about here? Here you see, you have a rally candle, you have a base candle, you have a drop candle. This rally base drop is the origin for this entire fine-tuned 75. Not only that, this is also acting as a high liquidity zone. Why high liquidity zone? Several times the zone is tested here. Actually, for risk point of view, I have made it rally base drop. If you draw this wick to wick, you will see many times prices entered here. And today twice it gave you the trade opportunities. This is the first opportunity at 11 o'clock, 5 minutes candle. See, up to here it has given 1:3 RR, it achieved, but failed to reach this 15 minutes target. We have a 15 minutes target here. We have a rally, 3 base candles and a rally, and failed to reach this target. Even second trade also failed to reach the target. First let us focus on the first trade. But it gave 1:4.5 RR, it gave till the bottom. But I am considering 1:3 because that is minimum required, because there are some people, they exit whatever the profit, they don't bother. They exit at 1:3 RR. That's why minimum, in case if it is failed to reach, at least a minimum 1:3 RR is required. That way we consider to check the performance of our software. Please remember, whatever 1:3, this is to consider the trade while calculating the performance of our software. That is very, very important. Minimum 1:3 is successful. See, what is the order I follow? First, it should reach 15 minutes target. Always I give importance to whether if it reach 15 minutes target zone, I consider by default it is a successful trade, 100% successful. Okay, suppose fail to reach 15 minutes target. Second, how I consider? I consider based on price action clues, you can book the profits. What are the price action clues? Different price action clues. One is like support and resistance lines. Another one is the pro gap areas. Pro gap is also target, right? Pro gap areas. And the third is the trailing stop losses. These are the different concepts. If any of these concepts they are supported, that way we will consider that could be the best possible profit to identify, to check the performance of our software. And the third option is minimum 1:3 RR should be there to check the trade is a successful trade. Maybe you might not have taken the book the profit. You might have targeted even more profit. Sometimes during this process you made a mistake. Your trade again very speed it came and finally zone is violated. Instead of getting 1:3 RR profit, you got your trade would have been stopped out. These are all the practical things might happen in the live market. For different people will have different experiences. So I am not considering those things. That's what I am saying. I am not considering what happened to your trade or what happened to my trade. I am considering how our software performance it is. Has it been performed? At least a minimum 1:3 RR it has given, or maximum till our 15 minutes target zone it reached or not. So these are the different measurement criteria to check the performance of the software, because the software is the one gave you these high liquidity zones, and accordingly we are building the strategy, right? So that's why, even though it is 1:4.5%, I am not calculating what is the maximum it has given. I am calculating minimum 1:3 given or not. If not, based on any price action clues, we exited to get better profit or not. That is how we measure. Okay, first trade it has given. Suppose if anybody using trailing stop loss, 1 minute trailing stop loss, because generally after reaching 1:3 RR, some people may use 1 minute trailing stop, or just near this 1:3 RR level. If any 5 minutes supply zone is there, they will use 5 minutes trailing stop loss they will use. That is the way people take the decision. Let us see. Let me show you. If you suppose if you go to this 5 minutes time frame, first we will see 5 minutes. 5 minutes, any supply zone is here? No, we don't have any supply zone because this is a drop based rally, not a drop based drop. So let's go to the 1 minute. Near to this, rather than booking the profit, some people aim for more profit. What they do? See here, exactly at 1:3 RR level, you have a zone here. See here, you have a drop, you have a 2 base candles with a hidden body, again a drop candle. So here you will draw a zone. Again you see below, you have a drop, you have a base, again you have a drop. First you consider this is the one, because your price achieved 1:3. And while looking into the chart, these candles are not formed. Let me hide the candle so that you will exactly understand what I am trying to explain. Let us assume this is the situation. Now it achieved 1:3 RR is achieved. Do you want to book the profit? No, you don't want to book the profit. Why you don't want to book the profit? Maybe prices may be further going down. When they are further going down, why do you want to miss this opportunity? That's why what you do, you will use this 1 minute trailing stop loss, because near to 1:3 RR level, you have 1 minute zone is available instead of 5 minute zone. So you will draw a supply zone. You consider this as a drop because here hidden body you are getting a big body. From the close of this candle, a big body, so drop. Okay. Now after that what you do? If this is violated, you want to exit the trade. Or prices are further going, you will get profit. Any new supply zones are created, you delete this supply zone and newly created supply zone, again you will adjust the stop loss. That's why we have given the name trailing. You are trailing. What is that meaning of trailing? You are adjusting or changing. Every time you are adjusting the stop loss. That is what trailing stop loss. So now you see again what happened here. Once again you see here a new drop based drop is created. Immediately what you do? You will adjust your stop loss to the new one. Now is it violated? No. Now again what you do? You will see any new zone is created. See here, you have a drop, 2 base candles, a failed ERC big candle, but okay, this body is good enough, came out of the zone. Now you draw the zone like this. You adjust it. Now it got some support, but unfortunately, generally you keep some buffer also here. Let us assume this is within the buffer. Now somewhere here you will exit your trade. Let me draw some horizontal line a little above. Roughly I am drawing small buffer. Now in this candle, this zone is stopped out. Stopped out means your trade is not stopped out. You will be booking the profit now. You close your trade by exiting the trade. That way you book the profit here. Now let me delete this. Now this blue color area will exit. See, this blue color area is almost same as 1:3 RR level. Maybe we are lucky. You are lucky that exactly you got 1:3 RR level profit. Sometimes you may get less profit. Sometimes you may get more profit. Today exactly you got. I'm just trying to tell the strategies how people will use. So these strategies you implement once prices reach minimum 1:3 RR. So that way this is a successful trade because it achieved minimum RR. You may feel like, okay, we achieved 1:4.5 RR by drawing line up to here. But how do you know in reality? Exactly from here, again prices will be started moving up. We are not God, right? To know what is happening here. So that's why the practical things only we have to implement. So this is the way how much UPL has given the profit for the first trade. UPL has given the profit 1:3 RR, 4.3% ROA it has given. 7,000 rupees profit, which is 4.3% ROA as per one futures. Okay, why ROA is reduced here? Margin cost is more. Maybe around 1.5 lakh or 1,60,000 is there. The margin cost. See 3,000 here, 3,750, we got 5.1% ROA. But here you see more profit, 7,113. But ROA is only 4.3. Earlier is 5.1. The reason is the margin cost is more here. Earlier maybe your margin cost was less than 1 lakh. Now it is around 1.5 lakh. So because of these reasons, your ROAs will be changing. Okay, this is the first one. After that, what happened? Again prices moved. Let us assume you exited your trade. Now again, once again you got a second trade. Now second trade you can take more risk. See, always we have to, when you get the second trade, you can aim for even more profits. You should not immediately exit the trade based on the trailing, because already you got good profit. Suppose if it is stopped out, how much money you will lose? Maybe say another maybe 1,000 rupees or 1,100. You already got 7,100 rupees profit. Even if you lose 1,100 or 1,200, still you will get another 6,000 rupees profit you will get. Right? So that's why when our first trade is successful, second trade take more bigger risk. Don't keep very strict stop losses. Don't keep very strict trailing stop. What I mean to say, trailing stop. Wait for more time. Patience should be there, because already you are in the profit on the first trade. There is nothing wrong taking higher risk. So, but second trade, you see, market was like going down, going down, going down. See, this is the level it reached 1:3 RR. Now you maybe, if you really wants to, you can use a 5 minutes trailing stop loss now. See, here you have a drop, base, drop. This you can keep. Next again drop, base, drop. Now we are nearing to this zone, but here you see, lot of time this is holding. If you go to 1 minute, you get better clarity. This is the area it is holding. Let me draw one more line. In between, this is the area it is holding the prices for lot of time. When is the first it came? At 2 o'clock 9 minutes. When is the last? 2 o'clock 46 minutes. So definitely it is nearing to the market closing. So somewhere in between these two lines you can exit, because here only it is moving majority of the day, starting from 2 o'clock 9 minutes or 2 o'clock 9 minutes until 2:45 it was moving here only. Moreover, market closing session is coming. And some people, maybe you, if it is not F&O trade, if you take a trade in cash segment, you need to exit by 2:45. Otherwise, your broker will be closing your trades automatically. So that's why. So I thought I have drawn this support line. See, previously we discussed resistance line. Now see, this is the support line. Why I am saying support? This is the area prices are holding multiple times. Maybe you can draw a little above also. A little above also you can. So mostly this is the area it is holding the prices. So I thought maybe this is this blue color line what I have drawn. That is the best level to calculate the maximum profit given by our high liquidity software. Performance point of view I am telling. Where you exited it could be a different story. If you are very strict about trailing stop, if you are using 5 minutes trailing stop loss, probably you might be holding till here. But is it violated? No. This is not violated. See, again it has given drop, base, drop. Now market is closing. Finally, before market closing, maybe last 5 minutes or 10 minutes, you would have closed your trade somewhere here. So those who closed at the support line, probably they get the best profit. Rather than, still this is a good profit, no doubt I am saying. What I am saying, blue color line, what I drawn support line, that could be the best, because the majority of the day it holded the prices here. Still we would have holded. See, this is only just how much time? 35 minutes time, that's it. 35 minutes is a small time. See here, earlier, we might have, see previous stock, we might have holded more than 1.5 hour. But here, why only within 35 minutes we need to exit? Because market is nearing to the closing hour. That's why we want to rush up a little fast, we want to exit our trade. But earlier trade, previous trade, it was around at 11 o'clock. We have sufficient time. That's why we holded it for a long period. See how decision making you are taking. Sometimes it's all depending on your how near to the your closing hour, how much distance, time distance, time interval before closing the market. How far we are. Based on that, your decision making will be changing. Okay, I calculated the performance till this blue color line area, the second trade. That way UPL second trade has given 14,767. See, double the profit it has given. More than double, right? 14,769. What is the reason for getting this much profit? Two reasons. First one, successful. You have a confidence. Because of that, you took some little extra risks you took. What is little extra risk? No hurry. Holding the second trade for more time. You prepared, even if it is stopped out, you don't mind. See, because of these reasons, you are able to get a very good profit on the second. If this is the first trade, maybe you might not have taken that much risk. Got it? So that's why, see here, trading it is not only just your mathematical calculations, it is also about the human psychology. Both together only, your success will be dependent. Your success factors will be having the dependency. Okay, this is 8.9% ROI it has given till this blue color support line. So this is about UPL. And see, what is this concept? Lower time frame zone as an origin. This rally based drop, this is the origin for this entire fine-tuned 75-minute zone. And we have one more trade with the same origin. That is LTF, L&T Finance. This is a 75 minutes high liquidity zone. Actually, we have seen this. We got a trade yesterday from this fine-tuned zone. And one mistake I did was yesterday, I didn't draw this zone. Even today also, I didn't draw until the price action is happened, the first price action. The moment sharply prices came down, then I realized there is something I missed. The moment I saw here, excellent zone. We have a rally-based drop. And this 5-minute zone is the origin for this 15-minute zone. Yesterday we got this trade. And even today also still it is valid. Because yesterday, see, price came almost close to this. Just maybe touched. Maybe you can take one more trade also today. And moreover, yesterday you see near this it strongly holded. But today you see what happened? This entire zone is violated. You may say, is it stopped out? No. Reason? This price action happened in morning 9:15 1-minute candle. Look into the 1-minute time frame. See? This entire price action is happened in 1 minute. Previously also I told you, 1-minute price actions we are ignoring. Whether the trade is successful, we are not considering. Whether the trade is stopped out, we are not considering for the performance of the calculations. The reason is morning 9:15 huge volatility changes, it disturbs all our statistics. Either it improves our statistics or it will decrease our statistics. What we want is the reality, the real, practical. These are 115 is not morning 9:15 candle trades are not a practical trades. First of all, you won't get just fraction of a second prices will go. It looks like this zone is tested. It looks like it is a perfect trade. See, huge profit it has given. How much profit? More than probably you will get a huge profit, more than 1:5 or 6. RR you would have achieved from here to here. But really, if you want to place a order, before placing, prices would have came down. So that's why already several times I told this point. Morning 9:15 trades are not not a considerable trades. But if the zones are violated, that's it. Those zones are gone. But they are not valid trades for us. If the zone give you a success, okay, fine. That is not an acceptable trade. See, if you consider morning 9:15, we got this is a stopped out trade and this is a successful trade. So that's why morning 9:15 trades are not valid. But anyway, just I want to show you this zone is gone. Yesterday we got a test, but today also I thought we can consider a trade. And I completely ignored this zone. Which zone? This lower time frame zone. I have to accept my mistakes also. Why I ignored? I don't know. Maybe the analysis yesterday also we got so many stocks, nearly 15 zones or something are there yesterday also. So I didn't quickly analyze all the zones with the perfect way. So somehow I missed this zone yesterday. Today also I missed. Until this price action happened. Which one? Morning? This price action. Because my concentration is only on this. I want to take one more trade here. But 9:15 candle, everything is gone. The moment it is gone, okay, fine. This is no more a valid zone. And no trades also because it is everything happened. Then I kept. Price came sharply. Then immediately I am seeing on the chart. This is the price action. Let me show you next candle also. This is what I am seeing on my chart. Then immediately I realized such a sharply it came down. Did I miss something on my charts? I saw. The moment I saw, there is a horizon. We have a rally, 2 base candles and a drop. Then I realized maybe we can consider this itself is a leg in. This is the base, this is the drop. Why? Because this from here, earlier it picked up the orders from here and see how sharply came down. It picked up the orders from this zone. Which one? The 15-minute zone. And the 15 minutes leg out candle is formed. Not only 15 minutes, even daily leg out candle formation is also happened. This is 75 minutes, right? Yeah, the 75 minutes leg out candle is also completed after it picked up the orders from this zone. So that way this is very, very important. This is a powerful zone. That is the reason why, see here, it is already tested earlier and today morning 9:15 also, see. 9:15 candle, it opened here, prices were going sharply up. But who stopped this rally morning at 9:15? Our horizon, the 5 minutes horizon stopped up. Then immediately I have drawn the zone. I thought maybe, okay, we missed an opportunity, but anyway it is a 9:15. But immediately what happened? Immediately prices are moving up and again it came. Then we should not miss this opportunity. And it gave a very excellent trade. And finally it reached the 15 minutes target. Okay, performance point of view, it reached 15 minutes target. Where is the 15 minute zone? Here we have a 15 minute zone. A failed ERC has a leg in, base and a rally candle. But, okay, this is performance point of view. But what is the practical? You may ask a question. Did you hold your trade till this point? No, impossible. Holding up to here. Software point of view it did, but what our human psychology does? Did you notice what is happening here? You have a support line here. How much time? This is the first candle, 10:15. And when is the last time it came here? 13 hours. 10:15 to 1 o'clock. How much time? Almost close to 3 hours. 3 hours time. Do you hold your stock if they are moving in the same area? It is impossible. Impossible. If anybody says, I hold it till it reached this 15 minutes final target, if anybody says, probably we all must appreciate him. Why? Patience. For his patience. And moreover, we don't know price will really reach here or not. We won't be knowing, right? See, that is what happened previously, the other stocks also. They didn't reach 15 minutes target. This one is reached. Okay, for performance point of view, we consider. Because first priority, we give it to target is reached or not. Performance point of view, software performance point of view. But now I am talking about our real trading point of view. You should understand the difference between software performance and our real psychology, human psychology in the live market. How our decision making will change. Do you consider here? Okay, actually here there is a 1 minute high liquidity zone is there. Let me go to 1 minute time frame. That the reason why it holded so much time is there is a 1 minute high liquidity zone. See here, failed ERC candle as a leg-in, as a base rally. Let me draw a 1 minute zone here. This is the one holding the prices. This is a demand zone. See here. Now you tell me, I'm just hiding what happened after 130. After 130 only, this zone is violated. Okay, before 130, what is happening? I am showing you on the screen. Now, by looking into this, please tell me, what will be the decision you will take? Do you hold until this zone will be violated? When is the first test happened? 10:57. Second test, 11:19. Third test, 11:28. Fourth test, 11:36. Next, 11:41. After that again they went on. Once again they came down. 12:41. And then 1 o'clock too. Now tell me, do you really hold this much time? If you ask me, I exit here. If not here, definitely I will exit here. Why? Because it is a zone, a 1 minute zone, strongly holding the prices. Maybe these many times when it is tested, definitely I consider this is a high liquidity zone. But 1 minute high liquidity zones, many times they will be violated during the intraday. They will be violated at some point of time. 5 minutes high liquidity zone violation during the intraday is not easy. Rarely they violate. Rarely. But this is a 1 minute zone. So if that is the case, do we really wait? Still I say no. The reason is, if you have so many other trades, other stocks in our list, they may give you trade opportunities. If I exit and book the profit, probably the money will be released. Same money I may use for some other stock. This is how our mind will be thinking. You may ask a question. Suppose if this is the only one stock is there in our list. We have only one high liquidity zone. This is the only one stock, you got the trade. Maybe at the time we can say maybe I can hold for more period. Anyway, no other stocks are available. There are higher chances again prices will go up and the zone might be violated. Okay, anyway, you didn't get a chance only one time only it came here. But you may say sometimes, so I don't want to take that risk. Anyway, I got good profit by the time they reached here. I want to exit. That way you may say. That is also a valid reason. But after this price action, by seeing, you should not feel regret. I missed a huge profit. Otherwise, I would have got a very big profit. See, what is the nature of our high liquidity zone? Majority of the times, our high liquidity zone trades will reach the 15 minutes target. Majority of the time. See the historic data. If you look into the historic data, majority of the time, at least I can say more than 75%, your zones reached 15 minutes target. More than 75%. If you take 100 trades, out of 100, 75 trades, minimum 75, I'm not saying maximum, minimum 75, they reached 15 minutes target. Only the 25% only they might have missed reaching 15 minutes target. Maybe some of them are stopped out, some of them are achieved 1:3 RR, or some of them are gave you some support or some kind of at high liquidity zone or support or resistance lines, they might have given you the targets. You got it? So that's why. So this is the practical time to book the profit. Maybe who took the trade in LTF, L&T Finance, I'm sure most of you might have exited your trade here. If anybody holded the trade, definitely my salute to that person. But okay, HLQ zone performance point of view, it reached 15 minutes target. Immediately reached or at the end of the market closing it reached, I don't care. Finally they reached. Reached means my software performance, whatever the target it set, the first target, it achieved. So that's why I calculated the target up to 15 minutes zone. Because for me here the importance is not about my trades or your trades. My importance is my software performance, how best it has given. That is what I am calculating. The best it reached the 15 minutes target. That's why LTF till the 15 minutes target it has given 14,000 rupees profit, which is 10.3% ROI. If you would have exited, how much ROI you missed, how much profit you missed, you have to calculate that way. Okay, this much ROI I missed or this much profit I missed because I exited. Probably I should improve my psychology, human psychology. Do I really need to improve or not? By seeing this data, we need to reintrospect. That's it. Okay, this is about LTF. What are all PID we discussed, Crompton we discussed, UPL we discussed, LTF we discussed. Next one is Ashok Leyland. Ashok Leyland is the one trade that is having a 5 minutes high liquidity zone. I don't know how many of you really observed. Even I observed after completion of the trade. Ashok Leyland trade, I didn't do my analysis. Let me tell you, at least LTF, I corrected my trade after seeing this price action. But Ashok Leyland, after completion of the trade only, I checked. That means I also should improve while analyzing my stocks. So what is that mistake I did? Let me explain you. I know why I made this mistake, but mistake is a mistake, whatever the reason it is. Ashok Leyland is a daily high liquidity zone. Is it? Yeah. This is daily high liquidity supply zone. Actually, Ashok Leyland listed by our software twice in yesterday's report. I don't know how many of you noticed. Our software listed Ashok Leyland as stocks near daily supply zone and also stocks near 75 minutes high liquidity supply zone. Daily high liquidity and 75 minutes high liquidity. What is daily high liquidity zone? We are in the, first let me show you daily. Drop, base, drop. This is the daily zone. Within this daily zone, we have 75 minute zone. This also I analyzed. This is my previous analysis. Except this, whatever, please notice this. This is a 5 minute zone. Except this, everything I analyzed previously. Even today also I did not analyze this 5 minute zone. This is a drop, 1, 2, 3, 4 base candles and again a drop candle. And this 75 minute zone is also a high liquidity zone. So our software identified both these zones. And anyway, this analysis we did previously. Which analysis? This drop, base, drop. Previously fine-tuned this zone. This 75 minute zone is fine-tuned with 15 minute zone. Where is the 15 minute zone? We have a drop, 2 base candles, a drop, follow through candle. You can also consider this is a medium size, keep inside, but imbalance started from here. So that's why I kept it. This is the 15 minutes area. It doesn't make difference whether you keep inside or not. Okay, drop, base, drop. And within this 15 minutes, we have a fine-tuned 5 minute zone. So here you have a rally, base, drop. And it's a very good zone. Why? Prices came against near to this zone. Prices came, it is not tested. Came near, again sharply came down. That means the order flow in this area is very strong. So this is the analysis we did earlier. See here you can also draw this also, instead of drawing this LTF zone also you can draw. This is also valid. Rally, base, drop. The lower time frame zone as an horizon to this 15. Either way you can plan your trade. That is also valid. And what I did not draw, what I have drawn only after the price action, this is the one. See, we have a high liquidity zone clearly visible. Rally, base, drop is also created. In the last time when prices are tested, this is a clear confirmation. New order flows are added into this zone. We should not miss this trade. We know all these fundamentals. Knowing all these fundamentals, I did not draw this zone. That means I completely overlooked. This is an aggressive trade setup. Aggressive trade setup, high liquidity zones, we should not miss. That is the only thing we should not miss. Even if you miss other aggressive trade setups, it is okay, we can give excuse. But high liquidity zones inside the daily or 75 minutes, we should not miss them. Because they are the great trading opportunities. But I missed it. I missed it until the trade completed today. Okay, I made a mistake. I am also human. Sometimes I make mistakes. Generally when mistakes happen, I told you when generally I make mistakes. When so many stocks are there, I won't do complete analysis. The immediate ones, opportunities, whatever they are there, I will just drop, because many times, high liquidity zones, they work very well. See, failure rate is very low, right? So that's why when so many stocks are there, I just immediately analyze it. Opportunity I will analyze, and many times I overlook the other opportunities that are there above. Suppose if this zone is violated, then the other opportunities will be providing trade opportunities, right? Yes. Because my ignorance means success rate is so much. Okay, even if you miss some analysis, it's okay, we have so many other stocks. See, 15 stocks are there. So generally when so many stocks are there, sometimes I compromise at doing full analysis on the charts. Because the lack of time, that is one problem. And doing so many activities, because I have to record the lectures, so many things I have to do. So that's why sometimes I am compromising when so many stocks are there. But earlier I already analyzed this chart. Earlier also, okay, today okay, excuse we there. But earlier also why I didn't identify this, that is what I am wondering. Maybe that day also might be so many stocks might be there when I analyzed this chart. And when I identified, I totally missed today after price action happened. See, price sharply, it came and came down. You may say it is morning 9:15. No, it is not 9:15 1 minute candle. This is 9:15 15 minutes candle. You got the trade at morning 9:15 18 minutes or 19 minutes candle you got. See, this candle you got. This is morning 9 o'clock 17 minutes candle you got the trade. See, why I am feeling regret for this is, so sharply it gave the profit. It reached the target in just 11 minutes. 11 minutes, it gave a huge profit. Everything happened. See, 11 minutes you got huge profit. You know, we should not feel happy for the profit you got. I never feel happy about the profit I am getting. You know when I feel happy? If my money is released quickly, my trade complete, when my money will be released quickly, when my trade completes. When my trade completes quickly, what is the advantage? Same money I can invest in some other stock. You got the point? At the time you should feel happy. The main reason, one of the main reasons, I would not say this is the only one reason, one of the main reasons why I focused on this high liquidity zone kind of concepts is this is one of the reasons. I want more profits and I want quick profits. Did you understand the difference? More profit is one criteria, quick profit is another criteria. You should, whatever the profits you are getting, quickly you should get. When quickly you get the profit, same money you can invest in some other stock. Rotation. Your money rotation will improve. So that is the reason why I felt bad when I missed this trade. When I realized how much big mistake I did in my analysis. Okay, whether I do the mistake or I don't do the mistake, HLQ zones, they will be doing their work. They do their work. You know, that is what you know about HLQ zones, right? Every time, why from HLQ zones only, why prices are getting reversed? See, prices are moving up. But why all of a sudden it changed the direction here? Why not they changed here? Why prices didn't? See, here also prices came down, small portion. But here you see it is a very big move. But remaining all these places, small moves. These small moves won't give you any good profits. But this is a big move. This is a very big move, right? So this much big moves are happening only from the high liquidity zones. That's why high liquidity zones are very, very important for us. Okay, what about this zone? This everything happened in morning 9:15. See, this is the morning 9:15 candle. 9:15 candle, whether you got the trade, whether your trade is stopped out, we don't consider. Even for performance evaluation also, we won't consider. Because 9:15 we are giving exemptions. Because due to heavy volatilities. So that way this fine-tuned order flow, why it is violated, maybe some people may ask, is there any reason for this violation? See, reason is very simple. Two reasons. Always remember, if a zone is violated, there are only two reasons. Reason number one, demand will be more than the supply if it is a supply zone. or supply will be more than the demand if it is a demand zone. At the time only zones will be violated. That is reason number 1. Reason number 2, due to other reasons, institutions might have cancelled their orders. Maybe their analysis might have been changed. Whatever the pending orders, they might have removed all the pending orders. Cancelled means their trade plans are cancelled. It doesn't mean their orders are there in the exchange. Because at the end of the day, all the orders will be removed from the exchange. Again, you need to keep fresh orders. Either you should manually do, or your broker software should take care of it. But the point you have to understand, cancelling the orders means institutions has changed their mind. They don't want to keep their orders, pending orders in this area. Maybe they are investing that money in some other stock. Maybe they might have felt some other better stock, and immediately they want to invest all their money in that. Whatever earlier they planned here, they will change their mindset and they will withdraw all the orders and they move on to that. So at that time, easily the zones will be violated. These are the 2 reasons. Other than 2, there won't be any other reasons. Either they have to cancel, or the demand will be more than the supply here. Hope you got the clarity. I don't find any other reasons other than that. There won't be any great logic behind this, why orders are getting cancelled. Very simple logic. Okay, anyway, the first one is happened on the morning 9:15 candle. It won't affect any of our performance statistics because it is deleted. Now it is no more valid. Now this 75-minute zone, what about this 75? It is a pierced zone now. Go to the 75 minutes time frame. Now this 75-minute zone is a pierced zone. Why it is a pierced zone? Because above this 75-minute zone, institutions already kept a high liquidity, 5 minutes high liquidity zone. And that 5 minutes high liquidity zone is acting as a trap. Which trap it is? Is it bull trap or bear trap? This 5-minute zone, is it a bull trap or a bear trap? It is a bull trap because all the long trades are captured by this supply zone. Bulls are captured here. That means earlier you took a short trade here and your stop loss is hit. When your stop loss is hit, what you have to do? You need to exit the trade. When you exit, institutions will be capturing all your orders and then they will be pushing. Some 75 minutes related traders, they might have kept their stop loss above 75 minutes zone. So all their trades would have been captured by these institutional orders. Everything they keep on capturing. Once there is no more demand means no more long trades, then the existing supply will push the market down. So that's why this is a high liquidity zone is also acted as a bull trap. Such a good zone, I missed it. You see, anything just above that. Definitely this zone will act as a trap. There are higher chances. Moreover, it is a high liquidity zone. Several times it is tested. And last time it is a rally based drop they created. That means a new order flow is also added here. And today, so nicely, you know how much profit it has given. And moreover, within how much time your trade is completed? In just, when is the last candle you exited? 9:29. When you got the trade? 9:17. That means in 12 minutes your trade is completed. In 12 minutes, Ashok Leyland has given a profit 18,050 rupees, which is 16% ROI. This much profit I missed because of ignorance in the analysis. But HLQ zones did its work. That's why we should be. See, this is an important lesson. Lesson to everybody, including me, everybody. When we are doing analysis, very carefully we have to do the analysis. You should not do just like that. We should spend good enough time. Maybe I didn't spend good enough time, that's why I missed it. But what is the cost? Okay, missed it. What is the cost? The cost is losing an opportunity that gives you 16% ROI. 16% ROI during intraday, that too in only 12 minutes. In 12 minutes, you would have got a 16% return on your investment. That is what ROI, right? Return on the investment. In 12 minutes, you got 16% return. Just because of not doing. This is an aggressive trade setup. I discourage you to go for aggressive trade setup, but not high liquidity zones. Whenever high liquidity zones are there, 5 minutes high liquidity inside a daily or 75-minute zone, so directly you can take the trades. You need not think about anything. No further clues are required. It is a high liquidity zone. How do we know it is a high liquidity zone? Because it is tested several times. That is one thing. And the second thing is the last time it is tested, it is again created one more rally based drop, the LOTL zone, and that LOTL again added a new order flow into the zone. And ultimately you got a good profit. If anybody would have drawn this, I don't know, if anybody would have identified this 5 minutes high liquidity zone aggressive trade setup, please put in the comment section. At least I feel happy that you are doing your analysis properly and you would have got a very good profit today. Because getting 16% ROI in just 12 minutes is not a joke, right? But that is how high liquidity zones works. So it is an excellent zone. My bad, I missed in my analysis. Okay. And remaining two, they are not practical at all. Chambalfet and Bank of India, both are not practical, but both gave very good. Why I am saying they are not practical? They are not practical trades for F&O traders. But they are practical trades in the cash segment, those who do position sizing. See, both are position sizing. And if you can able to do position sizing only in when you plan type 1 related trades. But why I am noting here? Because the HLQ zone's performance you are evaluating. Prices get into the zone, 5 minute zone. They gave you the target and it reached the targets. So this is the reason why we are focusing on this. First one is Chambalfet, fertilizers. But remember, they are not the F&O trades. They are only cash related position sizing trades. Because they are successful from our fine-tuned 5 minute zone, I am marking them at our Excel sheet. This is a 75 minutes high liquidity zone. Sorry, something mistake. Oh, Chambalfet, I opened a wrong one. Cholamandalam Finance, this zone is violated. We know this zone. Anyway, I opened, let me finish this and then go to Chambal Fertilizers. This is a 75 minute zone. It doesn't have a 5 minutes fine tuned zone. You know when a zone can be violated. Go to 15 minutes. Here itself I got a doubt by seeing this candle. This is a drop. Okay, anyway, medium size candle. I kept it inside. I want to see if in case if any good fine-tuned 5 minute zone is there, we can plan a trade. That was my trade plan. I have drawn, but here itself I got some doubt by seeing this. So the moment I went to the 5 minutes clearly says, don't take this trade. The reason, see, we have a drop candle. Again, you have a very big, high explosive drop. In between, no base candles. Suppose if you consider this as a medium size candle, I want to include, see, then how many base candles? 1, 2, 3, 4, 5, 6, 7, 8, 9. Do you keep these many base candles? Second thing, what is the risk of this zone? Very huge risk. You may say, okay, huge risk, still I consider I will do position sizing. Okay, if you do position sizing, even then how many base candles? So many. First of all, for me, this candle itself is not a base candle. This is a big candle. Let me hide this big candle, you will understand. Now you tell me, is it a medium size candle? Is it a large candle? Is it a medium size candle or is it a large candle? It is a large candle. If you draw a zone, how do you draw? You draw a rally, 1, 2, 3 base candles, medium size candle. This is the medium size. You keep it inside the zone. That way you draw rally, 4 base candles in the base and then a drop candle. How do you keep a drop candle in the base? Impossible. It is not a valid zone in case you keep. See, because you looking into this large candle, it looking like a medium size. Actually, it's not that. This itself is a large candle. So that is the reason why this zone, we know this zone 100% it will be violated. You already learned in lesson 16 when a zone will be violated. So that is what happened to this zone. So easily violated. Okay. And our focus should be on Chambal fertilizers, right? This is the one. Chambal fertilizers is a daily high liquidity supply zone. It is a daily zone. You have a rally, you have a base, you have a drop, rally, base, drop, and this base is fine tuned with 75 minutes time frame. See here, you have a drop, you have 2 base candles and a medium size candle also I kept in the base, and then a drop candle. This entire thing again I fine tuned with 15 minutes time frame. In the 15 minutes time frame again you see you have a rally, you have 3 base candles, you have a drop candle. So this is the 15-minute zone. Inside the 15-minute zone you have a 5-minute zone. You have a rally, base, drop. Generally how you draw? Type 2 proximal to minimize the risk. Okay, this is how you plan, because risk is more beyond 3%. Your F&O trades may not be good. But if you draw wick to wick, sometimes prices reach type 1 proximal and you will be missing the trade sometimes. But if you draw wick to wick, the risk is 3%. What is the maximum accepted risk? 2%. So 3%, can you take the trade? No, we cannot take the trade. But to make it 1%, to make it 2%, what I have to do? I can do position sizing, because I don't want to miss the trade. I am 100% sure this zone works very well. At least I have confidence. I don't want to miss the trade. If you feel like that, you can take a trade in the cash segment. Cash segment, you do position sizing. Some portion of your money you will be blocking. That way you can. Suppose you are a high value investor. Generally you buy some 10 futures or 8 futures. For the risk management point of view, if it is 3%, go for 50%. Maybe go for only 60% investment. Instead of buying 10 futures, you buy only 6 futures. And remaining the money what you are investing for the 4 futures, so that you just block that money, so that your capital won't be. So your on the total capital, only 6 lots you are buying. That way you can do. If you are buying only 1 lot, 2 lot, 3 lots, we don't trade when risk is beyond 2%. Okay, but why I am considering this? Because to check the performance of our software, because this one also given a good profit from this zone. 1:3 it achieved with this much risk. See, 3% risk, 1:3 achieved means what? 9% profit it has given. You got the point? 3 times. So huge profit it has given. See, here it tested and then some small up and downs here, and then continuously prices coming down, coming down, coming down. And finally here it reached 1:3 RR. When you got the trade at 11 o'clock. And when it reached 1:3 RR, some maybe around at 2 o'clock or 2:30, 2:20. Or say 2:30. 3.5 hours you might have been in the trade. Of course, we won't take this trade, I agree with that. But still, why I am keeping in our list is because the performance. Today, high liquidity zones worked like anything, all the high liquidity zones. Whichever the zone I am seeing, they are giving. Whether it is a long side, long trades, if it is short side, short trades, they are working. Today we have 15 high liquidity zones. Out of 15, almost half of the zones gave you profits today. When they gave profits, I don't want to miss those statistics. Because we have to celebrate. See, one day 4 stocks are violated, right? January 1st Sunday. Monday, 1st Monday. January 1st Monday. But today all our zones are successful, so we have to celebrate. But you can't take a trade. But there are people who knows. Some people might have did the position sizing, might have taken a trade. We never know. Those who do in cash segment, generally they take, because anyway the risk is small for them, because they can do position sizing. They can do position sizing, even the risk they keep it to only 0.5%. But small portion only they will buy the quantity. The biggest advantage with the position size is you can manage risk at your accepted level. The same thing, I can make it to only 0.5% risk. But I take my trade here only, type 1 proximal. But my profit also will be very small. If I lose my money, see, I made it 500 rupees risk. This stock, it has given 1:3 RR, right? How much profit I will get? 1500. I get only 1500 profit, right? Okay, still okay. Profit is a profit, right? If I lose on all my capital, I will be losing only 500 rupees because I did position sizing. That is the beauty of position sizing. Because I have seen some people in the comment section, already I discussed it, right? They missed the trade because they reduced the risk to only 4%. Those people, what they can do? They can take a trade. Instead of reducing this zone risk, you can take a type 1 proximal itself. But take trades in the cash segment by doing position sizing. But what is the disadvantage in this concept? Your overall profit margins will be reduced. Of course, your risk also small. At least instead of missing the trade, getting some profit is better. Something is better than nothing, right? If you miss the trade, it is nothing. If you get some profit, it is something. So that's why always something is better than nothing. That way you can do. Position sizing is a very good subject. If you don't understand position sizing properly, please go and listen the video once again. Maybe in lesson 18 or 19, one of these lessons I explained position sizing. Most probably lesson 19 it might be. That's a very beautiful concept. With clear examples, calculations, I have explained the concept. When you don't listen, some people are skipping the video and with fast forward you are listening. If you listen properly, you would have understood the concept very easily, because with clear example I explained position sizing. So use that concept. So that's why these trades are position sizing specific trades. That is the reason why I have included. Please remember, they are not F&O trades. Maybe I calculate the profits as per one futures margin cost. To be honest, that calculation is not 100% correct. But to make the people understand the power of our high liquidity zones, I have taken futures as a reference. But otherwise, this is not a futures specific trade. They are the position sizing specific. So that's why the statistics I am showing, they may not be 100% accurate, especially this one and the next stock. But in case if it is a future trade, what could have been your profit? That is what I am showing in this list. Chambal Fertilizers, if it is a futures trade, strictly speaking it is not futures trade. That's why, to make you understand, I have written this text. This is a type 1 proximal position sizing trade. But even though it is position sizing, futures point of view, if one futures if you would have brought, on the total investment you would have got 9.6% profit. But if you do the position sizing, you won't get. Probably half of the profit you will get. If you did 50% position sizing, instead of buying two futures, you brought only one future. That way, you would have got at least 9.6 divided by 2. So, how much you will be getting? Maybe 4.3% you might have got. Sorry, 4.8%. 4.8% ROI you would have got if you position size. Similarly, Bank of India is also same. The risk of the zone is type 1 proximal risk is 3%. If anybody would have done position size, the same zone again till its target zone, it reached the target zone, the 15 minutes target zone, it would have given 11.5 as per one future. But if you did position sizing, really you won't get 11.5. Half of the percent you would have got, or a little more extra you would have got. Suppose if you position size to 1.5% risk level, then half of this ROI you will get. If you position size to 2% risk level, you will get even more profit. Even the above also you will get more, because I am position sizing to 1.5% risk level. Probably this could be your half of the profit you will be get. Without position sizing, I am just showing you the calculations. Hope you understand. Because here, see, my goal is how our zones are working. That performance we are calculating. So what is the next one? Bank of India. Bank of India is a 75 minutes high liquidity zone. Our software identified this zone as a drop 1, 2, 3, 4 base candles and a drop candle. This is how it identified this zone. And this one we fine tuned with 15 minutes time frame. So here you have a 15 minute zone, a drop candle, 1, 2, 3, 4, 5 base candles and a drop candle. Drop base, drop. So within this 15 minute zone, 5 minute zone. You have a drop candle, you have 1, 2, 3, 4 base candles and a drop candle. Actually, type 2 proximal we have to draw like this. Still, if the risk is beyond 2%, maybe type 3 we will take. Even if it is risk is beyond 2%, somewhere up we will adjust. Up to 2% level we will adjust and we plan our trade. Generally, if you plan like that, today you would have missed this great trade. But does it really enter into the zone? Yes. Go to the type 1 proximal. The moment you draw type 1 proximal, today price entered. At what time it entered? Morning 9:15 candle, but it is not a 1 minute candle. Go to 1 minute time frame, you will understand. This is maybe 9:17 or 9:18. You got the trade at 9:19, 9 o'clock 19 minutes. So it is a perfect trade. And finally, when it reached the target at 13:45, 1 o'clock 45. So almost 4 hours, 30 minutes, 4.5 hours, close to 4.5 hours time we spent to reach this target. I know, you might have exited somewhere in the middle. But now we are checking the performance of these zones. See, the moment they are going to the fine-tuned 5 minutes levels, maybe whether it is a type 1 proximal or type 2 proximal, how sharply they are coming down, that is what you have to understand. Risk management point of view, you might be missing some of these trades. But performance point of view, the zones are working very well. That is the main point we have to understand, especially the last two trades, even though they are not practical for F&O related trades, but they are still valid trades and practical trades for position sizing point of view. People who take trades in the cash segment, intraday cash segment, and position size and risk, manage the risk up to 2% level, they would have got a very good profit today in this stock. If you position size, I am sure definitely you would have got at least 2% risk level. If you position size, definitely you would have got maybe around 9,500 or around 10,000 rupees, you would have got profit. Maybe you would have achieved, if not 9,500, maybe at least 8,500 or 9,000 rupees profit you would have got. At least you would have achieved maybe around 7% or 8% in between return you would have got. 2% risk level, because this is a 3% risk level. This zone is having 3% risk. So 1% if you reduce, still 2 more additional percent profits into 3 times. This, and moreover, it is not 1:3. It is more than 1:3. Approximately what could be the RR? Let me explain. Let me show you. Short position, adding some entry buffer, stop buffer, approximately I am adding. This is our entry, this is our target. You would have got 1:4 RR. 4 times you would have got on the risk. Your risk is 3 times. 3 times risk, 12. So you would have got 12% ROA. You got 11.5%. That means risk is something around 2.95 or something. That's why you got 11.5% ROA. If you reduce another 1% risk, so 4 times means you would have got 8 times ROA. You would have got 8% ROA. You would have got 8% ROA, you would have got, if you reduce the risk to 2%. See, on 3% risk, you got 11.5 ROA, close to 12. So that means if 2% risk into 4 RR means 8% ROA you would have achieved during the intraday. See, without reducing the risk. That is the beauty of position sizing. But that position sizing effectively you can do in the cash segment. Intraday also you can take the cash segment. Your brokers will be giving 5 times margin, but you won't use 5 times margin. You will use only 3 times margin or 4 times margin equivalent until the risk comes up to 2% level. Suppose if it is stopped out, 2% of your total capital only you will be losing. But you will not be using total capital. You will be using a portion of the total capital in such a way, if your trade is stopped out, you will be losing only 2% on the total capital, not on our invested capital. What is the difference between invested capital and total capital? Maybe total capital is 2 lakhs. And after doing position sizing, you have to invest 1.5 lakh. The money you are losing is not on the 1.5 lakh. The money you are losing is on the 2 lakhs you are getting. On the 2 lakhs. That means you will be losing only 2,000 rupees money. Because on 2 lakhs you are calculating. But invested is 1,500. But what about, 1.5 lakh. What about remaining 50,000? You will be blocking that money. That is what all these points I explained in the position sizing clearly. Also I told many people, even senior people also, they make mistake. They do position sizing and remaining money they invest in some other stock. We should not do. If you do, there is no meaning for position sizing. You assume your investment is 15, your capital is 2 lakhs, but you block 50,000. That's it. You won't use that 50,000 until you close the trade. You assume that 50,000 is also part of the trade, but you don't invest. That is how you have to understand the position sizing. So that's why these two trades will be successful trades for the people who do the position sizing, not for F&O's point of view. Even though I calculated on the full income on the F&O, but these statistics will vary. Just assuming, if you take one lot, how much profit you would have got without position sizing. That way I calculated these values, but please remember these last two stocks statistics are a little wrong. They are not accurate. Because these statistics are without position sizing calculations on the F&O. But if you do position sizing, you won't get this much profit. Okay, this is about the trades that we got the success. And remaining stocks, a few stocks we didn't get the trades. One is persistence. This is a daily high liquidity zone. Because of less time, I am not showing you how I fine-tuned, but I am showing the final fine-tuned area. You can try exactly the way how I got these zones. That way you can try. You go to the charts. This is the daily demand zone. We didn't get trade. See today, this is today's candle, daily candle. Next one is Prestige. Prestige, you see, it looks like successful trade, right? This is a fine-tuned 5-minute zone. Yeah, this is the one actually I thought of giving you some explanation. I forgot it. Sorry. Please concentrate here. We got a very good profit, right? We got 1.45. That means almost 1.5% profit we got. This is closing price. Then why we didn't discuss this stock? Why Prestige is there in our Excel sheet? This is the question you have to ask. See, price exactly, they entered into the fine-tuned 5-minute zone. Now let me go to the 5 minutes time frame. Is price entered into the fine-tuned 5-minute zone? No. Let me show you in 15 minutes time frame. Maybe better clarity will be there. Is price entered into this fine-tuned 5-minute zone? No. Okay, let me show you in the 75 minutes time frame. You have even better clarity. Is price entered into the fine-tuned 5-minute zone here? No. Go to the daily time frame. Is price entered into the fine-tuned 5-minute zone? Yes. Then why not in 75 minutes or 15 minutes? Because previously also in the Q&A session I addressed this problem. I don't know how many of you attended the previous maybe Q&A 17 or 18 or maybe 16. One of these lessons I explained. In trading view, daily candles, they are including for the last 3 or 4 months, they made changes. They are including pre-market open in the daily candle. Pre-market open. Market is open. When it is opened, at what price it opened? Look into the open price of this daily candle. At the open price is 1,192 rupees 15 paisa. 1,192 rupees 15 paisa. Actually, that is a pre-open market price, not 9:15 price. When pre-open market starts at morning 9 o'clock, 7 minutes or 8 minutes, it will start. At that time, that was the price, open price. But when really the actual trading starts at 9:15, what is the price? That price will be seen in the intraday candles. What are intraday candles? Any time frame below daily time frame is a intraday candle. Maybe 125 minutes or 75 minutes or 1 hour time. All these candles you will see 915 price. Remember this value again. I repeat, 1192 15 paisa. Now I am opening 75 minutes. This is the 75 minutes candle. What is the open price here? 1210 rupees. See the difference. See, pre-market opened inside this zone, fine-tuned zone. If anybody in the cash segment, if you would have had in the pre-market, if you would have placed your trade, then you would have got a very good profit. But as an intraday traders, what is the rule? Our trade should be after morning 9:15 candle, 9:16 onwards. Why? Why not before? Why not pre-market? Why not on 9:15 candle? The reason is there are higher chances. If you order in the pre-market, there are higher chances market may open with gap down. If market opens with gap down, what will happen? It will not only hit your stop loss, the prices will be going far below the stop loss. When prices are going far below the stop loss, and if they open, how much loss you get? Beyond 2% you get the loss. Is it not violation to our fundamental rule? We cannot accept the risk beyond 2%. So that's why as an intraday traders, we don't keep trades in the pre-market. And moreover, all these zones are near to the zone. All our stock, if the zone is far away, then okay, some extent we can excuse. Even if you keep pre-market orders. But all our high liquidity zones are near to the demand zone or near to the supply zone. So that's why we don't want to take a risk by keeping trades before the market starts. So that's why it looks like a successful trade. But actually price did not enter into the zone. Once the real market starts, your real market starts from 9:15. So that's why actually it is looking like a tested zone from the daily time frame, but it is not a tested zone for the intraday point of view. Hope you got the clarity. So this is the reason why we don't consider this as a trade at all for us. Otherwise it would have given a huge profit today. Okay, next one is a TI India. This is a daily zone. TI India is a very old zone. I fine-tuned up to 15 minutes, but 5 minutes are not, because this is in 8th May 2023. We don't have 5 minutes data in trading view. So that's why no trade plans. But I have drawn up to 15 minutes. 15 minutes, 3 order flows I identified. But anyway, we can't plan the trades in this. And remaining in the 75 minutes, CIMS. This is a 75 minute zone. These are the order flows. Next one is a PNB. This is also 75 minute supply zone. See, so many order flows are there in the PNB. Next one is Crompton, we discussed. PI India, we discussed. Bank of India, we discussed. Cholamandalam, just now I explained it is a zone violated. We know that this zone is violated. Already we discussed this one. And the next one is Exide Industries. This is also a 75 minute zone. Price did not enter into the fine-tuned area. And the last one is PEL. This is also 75 minutes high liquidity zone, and here also price did not enter. So these are the high liquidity zones identified from the previous report. Hope this information will be useful to you, because a lot of points we discussed. Let's all meet again in our next video. Thank you.